time for crypto to be part of institutional portfolios. And we're not just talking about asset management, we're talking about endowments, sovereign wealth funds, pension funds.
I bet I know what he said.
Yeah, he's kind of all in.
We've had him on the show before, and yeah, he's all in.
And to be fair, we'll hear a little bit later from him, but I mean, to be fair, he says there's still regulatory things to be working out. But if you notice, there's momentum. Jay Powell talked about it, saying he's not going to do any kind of crypto ban akin to what we saw in China. We see the Fed planning to come out with a report about maybe cryptocurrencies when it comes to central banks. And we do also have Gary Gensler moving forward with things, so there's a lot going on.
At the same time, it does still feel like it's very early days because there isn't widespread consumer awareness, I think, of these products and services still.
Yeah, but it's growing. Yeah. And the conversation's so different than 2 years ago, certainly 5 years ago.
Right.
In keeping with that, the other conversations at the event, so many good ones. Blackstone, President John Gray, saying his $684 billion investment firm has been selling assets to take advantage of liquid markets. Yeah, he says, Tim, good time to sell some assets.
He said, quote, markets around the world have been pretty strong, he said at the Bloomberg Invest Global Virtual Conference today. Well, it's generally an opportune time to exit some investments. Gray did make clear that he doesn't think this is necessarily the top of the market.
Dun, dun, dun. Gray, echoing comments from Bruce Flatt, Brookfield Asset Management's CEO. He said earlier at the conference, it's a very good time to be liquidating assets following a slow period last year during the depths of the coronavirus pandemic. This is that question, and we see the volatility, increased volatility in the market, but have we hit a top, or is it going to be maybe a little bit of a pullback and then we resume the upward move, which we've seen a lot?
Yeah, it was so interesting to hear what Dave said about 5 straight days in a row where the S&P 500 changed direction.
Exactly. You're listening to Bloomberg Radio.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are holding at session highs with the Dow, the S&P, NASDAQ all rallying. We've got the S&P up 62, now up 1.5%. The Dow up 1.3%, higher by 430, while NASDAQ up 1.7%, up 236 points. Stocks are rebounding from yesterday's rout. Treasuries are falling as investors assess the state of the economy ahead of Friday's jobs report. 10-year yield 1.52%. Gold down 0.4%. Spot gold down $7.25 the ounce to $17.62. West Texas Intermediate crude up 1.7%.
Billionaire investor Leon Cooperman making a $100 million donation to St. Barnabas Medical Center in Livingston, New Jersey, the largest gift to a hospital in the state. Well, Barry Ostrowski is president and CEO at RWJ Barnabas Health. And so the recipient of that donation, his organization, he's on the phone in Livingston, New Jersey. Barry, nice to have you here on Bloomberg Radio. How are you?
I'm great. Pleasure to be here, and I thank you for the invitation.
Well, it's great to have you here. First of all, we do want to talk about the donation, but, front and center, you guys have been dealing with COVID like any healthcare institution. How are things going?
Well, they seem to level off. We really evaluate what's happening based on how many people need to be admitted to our hospitals. At the height of the pandemic, we had 1,800 inpatients throughout our system. We're now down to about 160, although we were down far lower 8 weeks ago. But most of those people, while sick, don't require ventilator care and are not in our ICUs. And I must say that 99+% of them were unvaccinated.
Wow.
So I think we've seen the inpatient level off. We continue to get, of course, folks who convert to infection, being treated with monoclonal antibodies or, frankly, with weak cases just staying home. And we are, of course, insisting that all of our employees are vaccinated. We were the first in New Jersey to announce that requirement. And I'm delighted and gratified that we're well over 97% of our employees vaccinated now. There's another 2 weeks in the duration of the required time, and I think we'll be in pretty good shape at that point.
What happens if you don't, for the folks for that 3% or the last percentage of folks who don't get vaccinated?
I'm sorry. Yeah, unfortunately, they will have to be separated from the organization. I don't expect it to be a big number. And frankly, in today's world, losing anybody is a burden.
Yeah.
And I must say, while we disagree perhaps with their policy on vaccination and their personal choice on that, these are people who have sacrificed in order to provide care to our employees at every level of our patients at every level of our organization. So plan for the institution and our system in general, and he's reinforced our commitment to the mission. And now through this gift, we can accelerate those mission objectives. It is very important to us. He's a thought leader, and I know you believe the same about him. And that being a thought leader in terms of its impact on others who might become donors, but his endorsement of who we are and what we do this way is just an incredible act of philanthropy on his part. And for us, reinforcement beyond anything we can really describe.
How much do you rely on gifts like this in order to operate and also for capital expenditure for the hospital?
Well, we rely on it because, of course, we don't have the ability to raise equity in terms of share sales. We do use publicly traded debt. We recently raised some money there. And we have a strong operating cash flow. But in order to address all the capital needs of the organization in a timely fashion, these gifts of philanthropy are critically important. Eventually, we would be able to build the new facilities, attract the new clinicians, put in the new technology. but it would take much longer and frankly be more expensive by the time we got there. So philanthropy at any level, donorship in general, enables us to accomplish that which we want to in an accelerated fashion.
Well, thank you so much for finding time for us, and it's really great to check in with you, and be well and safe to your entire team. Barry Ostrowski, who's president and CEO at RWJ Barnabas Health, on the phone from Livingston, New Jersey. Coming up, a few stories to talk about. Fed under fire just a little bit. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Carol Massar, Tim Stanovic in our Interactive Broker Studio right here at Bloomberg headquarters. Coming up, among our most read stories, talks about the Fed under greater scrutiny. This has to do with those trading moves that we saw by some of the Fed members.
Yeah, and critics of Fed Chair Powell are using it as an opportunity to say, hey, he's not fit for the renomination.
Exactly. Senator Elizabeth Warren at the top. We're actually going to hear from her later on our broadcast. Let's get back, though, to the trading day. A rally underway, Charlie Pellet.
Indeed. We've got green on the screen here. Carol Massar with the Dow, the S&P, NASDAQ all advancing. Tim Stanovic as well. Don't want to forget you. We've got the Dow up now by 474 points, up 1.4%. Your S&P 500 index rallying 66, up 1.5%. NASDAQ up 243, up by 1.7%. And the 10-year yield right now, 1.52%. Spot gold down 0.4%, 17.62 the ounce. West Texas Intermediate crude up 1.7%, 78.91. Cannot ignore natural gas, surging now 9.7% on nat gas, 633 per million BTUs. Major story today, the run-up in natural gas prices, not only here in the United States, but also in Europe and the United Kingdom, topping 300 pence. Stocks rebounding from yesterday's rout. Treasuries falling as investors assess the state of the economy before a key payroll report on Friday. Again, the S&P surging now by 66 points, up 1.5%. Johnson & Johnson is asking the FDA to authorize a second dose of its COVID-19 vaccine for adults after a study showed it provided strong protection against infection. Meanwhile, federal researchers estimate the number of COVID-19 deaths in the U.S. this year is poised to surpass the number of fatalities in 2020. Dr. Amish Adalja, senior scholar at the Johns Hopkins Center for Health Security, and on Bloomberg Radio and Television this morning, he says the next challenge will be changing expectations for vaccines.
People don't understand, for example, that this is a virus that's not going anywhere, that's establishing itself in the human population, and you've got to learn to risk calculate. They don't understand what a vaccine is meant to do. Many people have this idea that a vaccine is somehow a bug zapper or a force field around you, not something that's meant to make disease that you get post-vaccination something that's milder.
Dr. Adalja with Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of those vaccine names, they're almost all higher right now. Pfizer up 0.4%. BioNTech, its German partner, the ADRs up by 1%. AstraZeneca's ADRs lower now by 0.4%. Moderna out of Cambridge up 2.2%. J&J, Johnson & Johnson up 0.9%. Recapping, rally underway on Wall Street. S&P up 67 right now, up 1.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
A lot of rotation in that pharma space, that's for sure. All right, Charlie, thank you so much. So, Tim, this is atop our most read on the Bloomberg. It talks about the Fed under greater scrutiny from both inside and outside its walls. That's following revelations about market trading by some senior officials. That happened back in 2020. Senator Elizabeth Warren, we're going to hear from her a little bit later on this.
Yeah, she'll be live on Bloomberg Radio and Television at 4:35 Wall Street time today, so in just a little while.
Yeah, exactly. So let's get an update on this situation, kind of set the stage. Bloomberg News Federal Reserve reporter Matt Boesler joins us right now on the phone in New York City. So, Matt, there's a headline that talks about, more scrutiny for the Fed. Are they really under incredible pressure? And most importantly, is the Fed chief really under pressure, and might his job be at risk?
Yeah, it certainly seems that way, Carol. I mean, it's kind of hard to disentangle everything that's going on right now with these trading disclosures from the ongoing question of what President Joe Biden is going to do in terms of the decision he has to make about whether to renominate Jerome Powell for another 4 years as Fed chair. And so certainly that is one of the main reasons why this continues to grab big headlines, obviously, with someone like Senator Elizabeth Warren gunning for Powell, trying to prevent him from being renominated. She's really latching on to this what's quickly becoming a widening scandal related to some of these trading activities that these Fed officials were involved in last year.
Well, Matt, help us understand the structure of the Federal Reserve and to what extent, if you think about it, the Fed Chair Powell sits atop. And indeed, like with another organization, a company perhaps, the person atop the company would say, okay, yes, the buck does stop with me. I am responsible for the people who are below me, at least on an organizational chart. Is it like that with the Fed and these officials?
It is. One interesting thing that we always talk about with the Federal Reserve in particular is that it has this kind of quasi-public-private structure where you've got the Board of Governors in Washington, D.C., which includes obviously Fed Chair Jerome Powell and Fed Vice Chair Richard Clarida, who is the latest to be drawn into all of these questions surrounding his trading. And then you've got the reserve banks around the country that are somewhat set apart from the D.C. operation. And that's, of course, where this whole story got started a couple weeks ago. And so, it looked like Powell certainly had more deniability a couple weeks ago when this really seemed to be an issue related to the Reserve Bank presidents, the former presidents of the Dallas and Boston Feds. Now, when you're talking about the vice chair whose office is down the hall from the Fed chair, right, it makes it a little bit harder to perhaps distance yourself from that than it was before.
Is this the first time that this has been an issue with Fed officials?
This is certainly the first time I can remember, in my time in the 10 years that I've been covering this now. Yeah. The one thing that people do like to recall lately with this story is, what happened in, I think it was 2009, after the financial crisis, where you had a member of the Federal Reserve Bank of New York's board of directors who got a waiver to trade in Goldman Sachs stock during, in the fallout of the financial crisis. And, those boards of directors at the reserve banks aren't actually involved in policy making, right? They don't attend the FOMC meetings. They're not, they have no say in what the Fed does with policy. But even that situation was enough to precipitate new rules around that kind of trading that, then made their way into the Dodd-Frank legislation that was passed thereafter. And so certainly, the precedent would seem to suggest that there are going to be changes as a result of this whole thing.
Yeah, and I do feel like that there was an kind of untold rule of ethics when it comes to, right, Tim? It just feels like you're at the Fed. You got to be very careful.
Yeah, it's surprising this all came out at one time, too.
Exactly, right? It's not just one. It's been three cases now at this point. Hey, Matt, thank you so much for getting us up to speed. Bloomberg News Federal Reserve reporter Matt Boesler. And just a reminder, Massachusetts Senator Elizabeth Warren will be live on Bloomberg Radio and TV at 4:35 Wall Street time today to talk about that.
Well, let's head back to Washington, D.C. for another chat. Lyons is standing by. Hey, Nance.
Hey, Tim. Senators say Facebook appears morally bankrupt. They heard today from a former Facebook executive who says she has evidence the company deliberately downplayed the dangers of harmful, divisive, and misinformed content in an effort to make money. Frances Haugen says the company uses algorithms that she says promotes the divisive content and in turn makes users feel worse.
Congress can change the rules that Facebook plays by and stop the many harms it is now causing. We now know the truth about Facebook's destructive impact.
Haugen recommends making all Facebook research public. She says unless the incentives change, Facebook won't. President Biden and congressional Democrats are deep in negotiations on the size and scope of spending bills. Their decision will likely impact economic growth in the years ahead.
The American economy is slowing after a spurt that ended the pandemic recession, economist Leslie Piegza of the firm Stifel Nicholas said in a Bloomberg interview.
We are very likely to see a noticeable slowdown in the back half of the year and going forward into 2022. We will see a slightly reduced activity level on part of the consumer, but also we're going to see a much reduced footprint from the federal government.
Texas said the persistence of COVID-19 will also have an impact, as will the shift of consumer spending to a pre-pandemic balance between goods and services. In Washington, Irv Chapman, Bloomberg Radio.
The nation's trade deficit is growing more than expected. Figures out today show the gap widened by $3 billion in August. Analysts expected an increase of $500 million. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Go south, young man.
Oh, that's what people have been doing.
Yeah.
Texas, Florida.
Different south.
Yeah.
A little southwest, a little southeast. We're talking about Wall Street shift south, running into Texas, Florida, culture wars. It's a great story on the terminal. Max Abelson, Amanda Albright. And the first line says, Wall Street's trip down south to Texas and Florida, where taxes are lower, regulators friendlier, real estate cheaper, and the pace is calmer, accelerated when the pandemic hit. It didn't take long, though, for the trouble to start.
Wall Street's three biggest municipal bond underwriters have seen business grind to a halt in Texas. This after the state blocked governments from working, Carol, with banks that have curtailed gun industry ties.
Yeah, exactly. Well, and this is, it's interesting. We've had conversations about people who are like, yep, we're moving down south because there are, certainly if you're a financial firm, there's reason that we just mentioned taxes, regulations. But we talked about what's been going on as a result of the positions that certain investment houses take and what that means and their ability to actually conduct some business there.
It's interesting because we have seen banks and companies take stands when it comes to cultural issues, when it comes to new legislation, but so far, most big banks haven't taken public positions on the new abortion restrictions that are happening in Texas.
And this is something maybe we'll mention with Michael Dell. I mean, he's got a company, based in Austin, Texas, and you do wonder about these companies that maybe are going to different geography for good reasons, but then there are either clashes with politics or culture clashes, and it makes it, difficult perhaps to kind of do their thing.
We did see a lot of companies, well, I would say prominent companies, move to Texas specifically in 2020 and in 2021. And I wonder, Carol, if we are going to start to hear stories about recruitment and what it's like to get employees in some of these areas. If people say, wait a second, I don't necessarily want to live in a state with rules like this.
That's a really good point, because we increasingly hear from leaders that, prospective employees are like, well, I want this, I want this, I want that. And if I don't have it, I'm going to look elsewhere, especially right now in what's a pretty tight job market. All right, you're listening to Bloomberg Business Week. Carol Master, Tim Stanovic, and this is, of course, Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Best level of the day right now with the Dow, the S&P, NASDAQ pushing higher, holding on to gains. Green on the screen right now with the S&P up 67, higher by 1.6%. The Dow up 472, up 1.4%. NASDAQ up 248, up 1.7%. 10 years down 13.30 seconds. 10-year yield 1.52%. Spot gold down 0.4%, 17.62 the ounce. And West Texas Intermediate crude up 1.8%. Right now, we've got the WTI 79 even a barrel. Natural gas surging 8.9%, $6.27 per million BTUs on natural gas. Stocks rebounding from yesterday's rout. Treasuries falling as investors assess the state of the economy ahead of Friday's jobs report. After earnings, PepsiCo shares up right now by just about 1%. T-Mobile US cutting the price of its new 5G wireless home broadband service by 17%, stepping up efforts to steal internet customers from cable and phone company providers. T-Mobile up by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic. So this story, also among our most read on the Bloomberg today. It's in the upcoming issue of Bloomberg Business Week magazine out later this week. It's, Tim, about Facebook, HP, Novartis, a few other big corporations who are finding a very novel way to pressure outside counsel.
Well, joining us now to talk all about it is Ellen Milligan, legal reporter at Bloomberg News. She joins us on the phone now from London. Joel Weber is editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Brokers studio. Joel, there is a problem when it comes to diversity at elite law firms.
Yeah, maybe this is like the other Facebook story.
Good point.
There's this other one that's clearly interesting, and this one is as well, but for different reasons. So everybody knows corporate America, or even bigger than America, global corporations have a ton of outside counsel. It tends to be fairly white and fairly male, and Facebook, HP, Novartis are among companies that are trying to put pressure on outside legal to diversify and have different types of lawyers representing them and working on their projects. And to do that, they're willing to maybe withhold some fees, which I think is if you want to get somebody's attention, withholding a paycheck will probably get them to listen up. Ellen, how's that working out?
Well, these companies are definitely serious about this. As well as withholding fees, they have said that they will redirect the work away from law firms who aren't up to scratch on their diversity and give the work to law firms which do have the adequate diversity. And their demands are quite high. Facebook requires half of the lawyers to be diverse, and that's gender, race, sexuality, and also disability as well. And Novartis and HP are also asking for this, and they're among quite a large pool that's actually increasing. And law firms are taking this seriously. They have to, right? Like, their profits hang on their relationships with their clients and the work that they get. And especially when it cuts to partnership level, they take an equity cut of their profits, of the law firm's profits each year. So it eats into the balance sheets of the law firm, and it eats into the pay that the partners take at the end of the year.
Yeah, you point out in your piece that last year Facebook spent $1.6 billion on legal fees, settlements, and fines, and I got a feeling like that number
might go up.
Perhaps might go up after this week.
might be an opportunity here. So there's a lot of companies that, we mentioned some big ones, but there has been an attempt to actually out this problem before. You mentioned in the story 2019, 170 companies sent an open letter to law firms criticizing that lack of diversity. I'm curious, did that work though, or did they have to resort to more painful methods?
Yeah, so those companies who signed up have taken a less threatening approach than Facebook, Novartis, and HP. Their approach is more that we will slap your hand and we might redirect work, or simply if they have 10 law firms, for example, saying we can carry out this litigation or M&A deal, whatever it is, they will pick the law firm with the best diversity. So one of the GCs we spoke to at Anglo American said it's more about encouraging law firms rather than threatening them. But I think everyone recognizes in the data that not much has changed over the past 5 years. Partnership level, it's still 1 in 4 partners are women across the US and the UK. 1 in 10 partners are from an ethnic minority in the US. So people recognize that this is slow. There are commitments in place, but I wouldn't be surprised if more companies follow suit with Facebook, Novartis, and HP if change doesn't happen soon.
Yeah, and I find it interesting, as you say, the companies pushing for change are they're not necessarily models of diversity. So it's do as I say, not as I do, essentially, which to me is like,
isn't that
what?
even better? Yeah. Like, we're going to hold your money because you need to be better, and we're working on it. But
It's incredible. So as a result of this, though, however it may happen, is it bringing about changes in law firms, global law firms?
Yeah, so the data we've seen, there is change happening in the lower rungs of law firms, so trainees, new cohorts, and associates. Actually, the gender split in those junior lawyers is 50-50, and almost 40% of some associates at US firms were people of color last year. But as I said before, it just dramatically drops when you get to partnership level, and that's a really crucial data point because partners control the relationships with the clients, they get an equity cut, and they run the law firm. So it does take sometimes decades for lawyers to be in a law firm before they get to into partnership level. But that's really the area where we haven't seen much moving over 5 years plus. And that's really the area that law firms really need to start pushing and promoting more people of color, more women into those more senior positions.
What about the other end of the pipeline, law school and training? Specifically, how law schools are doing with diversity and producing those lawyers who can then go and work at these firms?
Yeah, so that's actually, they're doing much better. The pipeline of young lawyers actually kind of gives some hope to this whole situation. The diversity among those new cohorts is so much better. The unfortunate thing is that before a lawyer becomes client-facing, they will have to get higher up the law firm. So even though a law firm might have good diverse representation as a whole, what these firms, Facebook, Novartis, HP, really care about are the lawyers on their matters. So the more senior lawyers who come into the office, who represent them in court, who help them sign the M&A deal, that's who they care about. That's who they want to see more diverse representation in.
So I'm also just curious, how do the U.S. and the U.K. compare? And you have some numbers in the story, but is one improving more than the other? And what kind of country dynamic is at play here?
Yeah, so they're actually pretty even on gender split. As I said, it's 50-50 across both markets. The US does do better on racial diversity. The US has a big population of Black people, for example, than the UK does. But it's pretty even across. I think law firms, a huge UK law firm will have quite a big presence in the US and vice versa. So I'm not surprised. And these companies are European-based and they're US-based, and they have reaches all over the globe. So I'm not surprised that it's actually quite a similar picture across both.
Well, let's hope as the pipelines improve, maybe it'll move all the way up the ladder. Hey, interesting story. Ellen Milligan, legal reporter at Bloomberg News, obviously joining us on the phone from London there. Check out that story in the upcoming issue of Bloomberg Business Week. Also online at Bloomberg.com/Business Week and on the Bloomberg Terminal. Jill Weber, our editor at Bloomberg Business Week, our thanks to you as well. Coming up, about 60 minutes left in the trading day. Yeah.
We're going to talk Rivian.
Rivian. Getting ready to IPO.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, October 5th. We've got the Dow, the S&P, and NASDAQ all rebounding from yesterday's rout. Treasuries are falling as investors assess the state of the economy before a key payroll report on Friday. Bitcoin surging 3.3%, now at 50,631. Natural gas, major story today. Nat gas surging 8.6%, 626 per million BTUs. Crude, West Texas Intermediate up 1.8%. Right now we've got WTI, West Texas Intermediate crude, 79.06 a barrel. Brent, the global benchmark, with an $82 handle, 82.69 for a barrel of Brent. Gold on the minus side, down 0.4%, down 7.80 the ounce at 17.61. The 10-year down 15.30 seconds, 10-year yield 1.53%. Equities higher across the board, with the S&P up 63, up 1.5%. The Dow up 444, up 1.3%. NASDAQ up 236, up 1.7%. Bottom line here, Tuesday rebound. Wall Street, meanwhile, looking ahead to Friday's jobs report and how that will play into inflation and ultimately the interest rate environment. Priya Misra is global head of rate strategy at TD Securities.
The Fed is going to want to see signs of a tight labor market before they shift that from being just transitory supply chain related inflation to an actual tight labor market, which is, I think, what's needed on the hiking front. But I think this longer term transitory inflation is why the Fed is has signaled imminent tapering. We do think that they're going to taper in November, finish by June.
PepsiCo has raised its sales outlook on rising appetite for its beverages and snack food. PepsiCo shares are up now by 0.8%. Again, recapping, S&P up now by 1.5%, and that's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, I just heard an interesting factoid. This is what I love about working with Tim, because he's like, yeah, we talked with Kyle Stock earlier about this story. He worked on this story for a long time. Doing other things too.
Yeah, doing other things too, but this story is a long time in the making. It's all about Rivian.
Rivian, it's the maker of electric vehicles. It's backed by Amazon.com and Ford. You know it filed for an IPO. We got that news after the close on Friday. Let's bring in Kyle Stock. He's Bloomberg News senior correspondent, and he's on the phone in New Jersey. 9 months, that's a long time to work on a story.
Sorry, I blew up your spot, Kyle. He told me, I should have told you, Carol. He told me that off air.
Oops. Sorry.
It wasn't a straight 9 months. It was just a little bit every day,
It's like your own baby, Kyle, okay? That's how we can think about it.
Exactly. Right. It's been a messy road, though, as you write. Tell us about your reporting.
Yeah, I mean, what was really cool is this was a startup, and it was really startup-y. We hear about these billion-dollar unicorns all the time that seem, manifest destiny, that they come into the world with this idea just set in stone and they just make it happen and everyone loves it. And this was not that. This is a story of a brilliant engineer who had an idea and it didn't work out, and he scrapped and he pivoted and tweaked and stretched his team and laid people off and almost went out of business, and then tried idea number 2, idea number 3, idea number 4, and then finally got a small investor, finally got a little bit of a lifeline, and everything started clicking.
And here we are in 2021, the expected potential IPO around Thanksgiving, which would value the company at $80 billion. And I want to contextualize $80 billion in terms of market cap, specifically for a car company, a little company called Ford that has been doing this for, more than a century. Market cap of about 50-some-odd billion dollars, Kyle.
And GM just under 80 billion, 79 billion and change.
So that's a big bet on the future, right?
Yeah, and it's a bet that, they can have a Tesla-like trajectory. Interestingly, I think the founding team here is in a lot of ways, very different and maybe even smarter than Elon was in the early days. And they certainly gathered, a war chest more quickly. There is sort of some baked-in success with Jeff Bezos behind you, but expectations are very high, and they are still just figuring out how to build these things. I mean, they're literally just now coming off the assembly line for the first time.
So, as you say, if we think about Tesla, there were a lot of naysayers and there were a lot of things that he had to overcome and figure out. But here we are. Is it fair to make the comparison? I mean, could we potentially be looking at a new car maker in the ilk of Tesla? And I mean, time will tell, obviously. But what are you hearing from folks who follow this industry?
Yeah, there's the general consensus is this is still, a totally new thing that no one's seen before. An electric truck, like a big rig that is also totally green. So there is that kind of, sort of wow moment to it. That said, the lane is getting narrow really quickly. So they'll be first to market, but by a couple months. Ford is an electric pickup in the works. General Motors has this GMC Hummer, which is even more expensive. So the sort of strategic coup that Rivian had, that RJ Scringe had 4 or 5 years ago, was great, but they were delayed in production. They're getting to the market later than they hoped, and their first mover advantage is dwindling. So it really comes down to whether they get this cult status that Tesla has, and that is really anyone's guess. They're very precious about the brand, about how they promote it, about who they have as Instagram influencers tied in, and so that it could happen. They're definitely being very careful about it, but that's sort of the big question.
Hey, Kyle, take us back over the last decade, because I think your thesis is really important here. The idea that the only reason Rivian isn't on the scrap heap of automotive history, and there are many American car companies that are, is its adaptability. What were some examples of earlier versions of Rivian autos that bear no resemblance to what the company is going to start offering soon?
Yeah, so Scringe was a car guy. I talked to, part of my exercise was calling all his old MIT classmates, and they all said, he was into driving, he was into sports cars. So his first baby was this very small, very affordable, very efficient sports car, and his model was the Lotus Elise, which is kind of a driver's car. It's kind of Porsche-like car without the price tag, and that was his first idea. There was talk about it being a hybrid or not a hybrid. Ultimately, when they built the prototype, they just put an engine from a Mini Cooper in there just to get the thing running. So that was the first one, and then he pivoted and said, well, we should go upscale, we'd maybe do a more expensive sports car. And the pitch would change based on which investors he was talking to, which potential investors, and what they might like to hear. There was even sort of half an idea to do a race car for the guy in Brazil. And then he ends up in the desert in Saudi Arabia through a contact at MIT, ALJ, this investment
coming to a
empire.
streaming service near you very soon. I mean, it's kind of wild. Well, you know what I want to ask you? I mean, we just got about 30 seconds. Is he a car guy? Is he an engineer? Is he a tech guy? Because, cars are increasingly about technology. Just 30 seconds. What is he?
He's an engineer first. He's a car guy second, and he's probably a better tech guy than most tech guys out there. He's an absolute polymath. But everyone I talked to said he's primarily an engineer. He's just interested in the idea and the meritocracy of that. And that's what made it work.
We shall see. They filed for an IPO, so they're coming.
They're filed for an IPO, and they got the backing of Amazon, which I think is really significant.
Yeah, exactly. Well, 9 months, it was worth it. Kyle, thank you so much. Senior correspondent, Bloomberg News, on the phone from New Jersey. Another new issue, right?
Yeah.
Potentially.
Yeah, exactly. Check out this story. It's available at Bloomberg.com. Just a fantastic deep dive into all things Rivian. Well, let's head now to Washington, D.C. for a check the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey, Tim. There is still no consensus or vote in Congress on raising the debt limit. Republicans say they will not vote to raise it and believe Democrats should do it without them. White House spokesperson Karine Jean-Pierre says Senate Minority Leader Mitch McConnell is leading the charge in blocking the process.
The Republican filibuster of the debt ceiling is dangerous and it's reckless. They are playing chicken with the full faith and credit of the United States.
Pierre spoke on Air Force One as President Biden travels to Michigan to promote the bipartisan infrastructure plan as well as his Build Back Better agenda. The Facebook whistleblower who has revealed internal research documenting societal and mental health risks has been on Capitol Hill today. Frances Haugen told senators the company is well aware of the problems with its platforms, but wants Congress to believe those problems are just too difficult to fix.
Congressional action is needed. They won't solve this crisis without your help.
Haugen says the social media giant intentionally hides vital documents from the public and government regulators. She says that needs to change. Facebook says it does not agree with Haugen's characterizations of the issues within the company, but does say it's time to create standard rules for the internet. U.S. Capitol Police forcibly pulled a man from a suspicious vehicle outside the Supreme Court in Washington today. They tried to negotiate with the suspect, but were forced to use a flashbang grenade and yank him from his vehicle. The man is in custody and has been identified as 55-year-old Dale Paul Melvin of Kimball, Michigan. The incident comes just a day after the nation's highest court began its new term. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, everybody, sit tight. We got a lot going on in this story, some statistics, but basically the bang of the story is Gen X leading boomers, trailing with 50% wealth jump during the pandemic. So we're talking about Gen Xers. They're typically age 41 to 56.
Yeah, they're often overlooked when it comes to demographic groups. They're squeezed between baby boomers and millennials. They've experienced a wealth boom in the U.S. since COVID-19 was declared a national emergency. During the pandemic, Carol, household wealth distribution has shifted from these older generations to those who are reaching their peak earnings years. That's according to some data from the Federal Reserve.
Yeah, and they talk about the COVID-19 crisis kind of marking a rebound of sorts for this group that was worst hit by the 2008 financial crisis. Millions of Gen Xers who were in their 30s and early 40s at the time, they lost jobs, they lost housing wealth. So since the careers of the Gen Xers, they've stabilized, they've been able to save money, they've invested in the stock market and 401ks, retirement accounts. So as of June this year, Gen X held 28.6% of the nation's wealth. That's up 3.9 percentage points from the first quarter of 2020, according to Fed data. Put it into dollars, that translates into a 50% gain in the aggregate net worth, the difference between a household's assets and debts. So welcome to Econ 102.
The shares
I don't know
held
that
by,
it's 101.
Yeah, I think that's 101. That can be 101, right?
It's basic, yeah.
Yeah, the shares held by the so-called silent generation. Those are those who were born before 1946. And also the boomers, the largest demographic group by far, they actually declined in the same period.
Yeah, so it's interesting. So another way, if you want to think about this, in terms of the Gen X wealth boom, the cohort of about 34.6 million households added $13 trillion in assets over 15 months. That's more than the $12.8 trillion added by boomers, a group that includes 7.7 million more households. It's a lot of numbers. So they just added a little bit more wealth is what it looks like. Is that correct?
Yeah, that's correct. But, you know, we can't talk about Gen Xers and not talk about millennials because the COVID-19 crisis and the housing crunch it generated hit when many Gen Xers, they already owned a home, but the millennial generation, 25 to 40, were less likely to be homeowners.
A lot going on, wealth moving around here in terms of who's got it. So anyway, check out that story. Alex Tanzi wrote it, and you can find more of it. Lots of data in there at Bloomberg.com.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Turnaround Tuesday. This update brought to you by Barish and McGarry, lawyers for the 9/11 community. For 20 years, they've been fighting for those who continue to get sick from the 9/11 toxins. Free health care and compensation are available. Visit 911victims.com. It is an up day. We're close to session highs right now across the board. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are surging today, helped by Senator Joe Manchin saying he is not ruling out a spending bill above $1.5 trillion. Dow's currently up 467 points. S&Ps are higher by 65. NASDAQ rises by 240. The U.S. 10-year yield at 1.53%. Gold is down 8. Transports gain 300 points. And Bitcoin jumps 3.6%. Among the main 11 S&P sectors, only utilities and real estate were in the red. And leaders to the upside in the Dow, Goldman Sachs, and Microsoft, while Merck led to the downside. After earnings, Pepsi rose as much as 1.5%. And in the commodity space, U.S. gas climbs to the highest close in 12 years. In other news, Carl Icahn reports a stake in Southwest Gas. And wrapping things up, U.S. Bank launched a Bitcoin custody service. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg Time Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These plants are becoming more and more expensive. You're looking at sort of $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
You are listening to Bloomberg Business Week, and it is time for the Bloomberg Big Take. And so this is really a story that has to be on your radar. And I got to say, it probably is already, because we keep talking, the whole world keeps talking about the energy crisis that we are seeing at this point. And what's interesting, the Big Take says that what we are living through right now, this first major energy crisis, is really of the clean power transition. And Tim, I hadn't really thought about it that way, but that's largely what's going on, too.
Yeah, the shock that we're seeing now is one that we could continue to see as we, over the next few decades, make that transition from fossil fuels to renewables. David R. Baker is energy reporter for Bloomberg News and wrote about it for today's Big Take. He joins us on the phone from San Francisco. David, why is this so rocky? Why is it so shaky? Why is it so uncertain?
Why is it all of a sudden happening like it feels like we're being hit hard all of a sudden?
Well, the funny thing is, if you look back, there were signs that this was coming months ago. We here at Bloomberg had some stories back in the spring about how after the winter, Europe was exiting the winter with its natural gas supply facilities, its storage facilities at really low levels, and that was kind of worrying. And in retrospect, that was the big red flag that we all should have noticed, and that snowballed into the crisis that we're seeing now. But it essentially is an effect of having a big price spike in an energy commodity, an old energy commodity, natural gas, that has been exacerbated by the fact that we are now changing up our power systems and, for the moment, really reliant on that one fuel. And that triggered a whole bunch of effects around the world that we're seeing from, well, basically South America to China.
So that one fuel you're talking about, right, is cleaner burning gas, not gas?
Exactly. Natural gas and, of course, the export form, liquefied natural gas. LNG, yeah. The world over the last couple of decades really started using a lot more of this fuel because when you burn it in a power plant, you get half as much greenhouse gas emissions as you would if you burned coal. So we had plenty of the stuff around. It was available, and it was cheaper to burn in the long run and better for the climate. So the world really started leaning heavily on this one commodity while we were making the transition, and that's biting us now.
Hey, David, how much of this has to do with a simple concept called storage and energy storage?
Well, a lot of it has to do with that in a couple of different ways. Obviously, you've got the storage of natural gas itself, and Europe was low on its supplies at the start of the summer. You also had the UK, which just has less storage now than it needs necessarily. But also on the other end of things, where you've got renewable power, the system now around Europe and the United States is accommodating a lot more renewable power than we've ever generated in the past. But we still don't have an easy way to store a lot of it at any given time. We've got batteries, big batteries, that are being plugged into the grid in California that can stabilize the grid for about 4 hours at a time. But if you want to get bigger than that, you have to build a pumped hydro storage facility, which is essentially a couple of reservoirs sitting at different elevations in hills or mountains. And just from that description alone, you can tell those facilities are not cheap to build, and they take time to permit and get online, and so it's not a quick solution to anything. So we've got all this renewable power being generated, but we don't have a great way to store it.
All of this is happening, as you guys write, at a time when power consumption is projected to increase 60% by 2050, according to Bloomberg NEF, as the world phases out fossil fuels, switches to cars, stoves, and heating systems that run on electricity. I'm just going to say to you, David, it is time for us to somehow figure out really how to harness the sun in a big way, right? Or maybe, I mean, are the alternative forms not going to be productive enough, fast enough, and maybe we just haven't quite found the right solution as an alternative, a real sustainable and storable solution when it comes to fossil fuels?
Well, I'd say, first of all, we are starting to harness the sun in a big way for the first time. But again, it goes back to the problem, your solar power plants here in California, in the middle of the day, they crank out more power than we actually need. But we can't sock most of that away for nightfall. We can store some of it, but not a lot. There are some solutions that are being studied pretty intensely for longer-term, large-scale energy storage. And probably the most promising at the moment is hydrogen, because there's a way that you can produce that with excess renewable power, and then just store it until you need it.
Right.
So there are possibilities out there,
Yeah, my husband, that's the thing, he always I think it's hydrogen. We have these constant debates. He does. David, great story by you and the team. David Baker, energy reporter at Bloomberg News. It is the Bloomberg Big Take. Find it at Bloomberg.com.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Hey, you know, I missed him yesterday.
I did too.
We didn't get to do a song of the day or chart of the day.
We didn't, but Dave Wilson is back with us, and in just a few minutes, we're going to hear his pick for Song of the Day, Chart of the Day, and of course, the Stock of the Day.
Which means it's going to be an extra special song,
Ooh.
I'm thinking, because he was gone yesterday.
And I'll extra miss it.
You will extra miss it. All right. Never missing anything is our own Charlie Pellet with an update on the day. Hey, Charlie.
Well, hello there. I'm betting Dave Wilson goes with Springsteen. Just a guess. Who knows? We've got the Dow, the S&P, NASDAQ all advancing. 28 minutes to go ahead of the closing bell with the S&P right to the numbers here. Up 58, up 1.4%. Turner on Tuesday. Big rebound from yesterday's decline. The Dow up 427, up 1.3%. NASDAQ up 214 right now, up by 1.5%. NASDAQ 100 index up 1.7%. Russell 2000 up 0.5%. Dow Transports up by 2%. 10-year down 14.30 seconds. 10-year yield right now 1.52%. The why? We've got a rebound. Treasuries falling as investors assess the state of the economy before the Friday jobs report. Right now, we've got West Texas Intermediate crude oil up 2%. That's $79.16 a barrel. Sticking with energy, natural gas futures have jumped to the highest settlement price in 12 years here in New York as global gas supply shortages stoke concerns about U.S. supplies. Natural gas surging today by 9.1%, $6.29 per million BTUs on natural gas. Gold down 0.5%, $17.60 the ounce. J&J Johnson & Johnson asking the FDA to authorize a second dose of its COVID-19 vaccine for adults after a study showed it provided strong protection against infection. Meanwhile, federal researchers estimate the COVID-19 death toll in the U.S. this year is poised to surpass the number of fatalities in 2020. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security, and on Bloomberg Radio and Television this morning, he told us health experts must revamp the message around vaccination.
So in general, I think public health communication has to be completely revamped after this pandemic because so much of it went the wrong way. People took the wrong things from it, and we made very mistakes that were easy to forecast that would actually happen based on how nebulous sometimes the guidance had been from public health authorities.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks we track, Pfizer, little changed, up less than 0.1%. Its German partner BioNTech, the ADR is up 0.8%. ADRs of AstraZeneca down 0.8%. Moderna out of Cambridge up 2.3%. J&J Johnson & Johnson up now by 0.5%. Recapping, natural gas surging 8.9% today. West Texas Intermediate crude up 1.3%. 10-year yield 1.52%. S&P up 59, up 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
Look at me. All together now. All together now. All together now.
Is this the Beatles?
It is.
It is the Beatles. I'm never sure. Whenever I hear it, I'm like, is that the Beatles? Yeah.
Well, that's probably true with a lot of their later recordings, just
Right,
simply
it's a
because the sound got so much more diverse. You know, it
Yeah.
wasn't just "She Loves You," yeah, yeah, yeah.
Are you all together now? You missed us? Is that what this is all about?
Oh, well, you can put it that way if you like.
Hard Dave Wilson.
Absolutely. Wasn't my frame of reference at the time, but hey.
It works.
You know?
Just say yes. Just say yes.
Exactly. You know,
All right.
I learned that a long time ago. In any case, the altogether now kind of refers to what I saw. You know, last week I was sitting in this very studio and I was running the GRR function on the Bloomberg terminal that tells you how industry groups are performing, and I did it on the 11 main ones in the S&P 500, and I saw there's not all that much of a difference between the best performer and the worst performer. And, you know, when the quarter ended, that was still the case. Financial stocks led the way with a gain of 2.3%. And then you looked at the worst performer, industrial shares, down 4.6%. Put it all together, you're talking about a gap of less than 7 percentage points between high and low.
Is that not a lot?
No, it is not. In fact, I went back on the Bloomberg terminal and ran that GRR function all the way back to 1989 when the current sector indexes were first created, and it was the smallest gap ever. And, think about it. You read reports from Wall Street strategists. They tell you, you like this group, you should buy more of their shares. Maybe you don't want to focus on this other group. That sort of strategy, basically didn't pay off at all last quarter. And it was interesting to see that because, historically, you think about how money managers try to add value.
Well, they talk about rotation, right?
Right, and they talk about what are called sector tilts.
Yeah.
The whole idea that, if technology is 20% of the S&P 500, you have 25 or you have 15 or whatever. And, that's supposed to get you better performance, say, than the S&P 500. And, what this particular chart showed, at least last quarter, the performance just wasn't there. In fact, a historical lack of performance just goes to show you that, as much as we think about volatility, we didn't have a whole lot of that.
Wait a second. Can we look
Wait
at
a
it? Can we look at
minute.
it from a different perspective?
Go ahead, Tim.
No, I'm just asking, Dave. Can we look at it from a different perspective, like a glass is half full perspective, that a rising tide lifts all ships, and we saw equally good performance from all sectors?
That would be fine if you had a rising tide. The S&P 500 was only up 0.2% in the quarter. So everything kind of got compressed. That's, what makes this all kind of interesting. And if you want to see what I'm talking about, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, Dave, it's that time. Stock of
It
the
is.
day.
Green Dot.
Oh.
Not the one on your Bloomberg terminal, mind you. The company, Green Dot. The ticker is GDOT. Now, they're big into prepaid cards and so on. And they made this deal back in May to buy a tax refund business from Republic Bank for $165 million in cash. Deal didn't happen. They backed out because they couldn't get clearance from the Federal Reserve to go ahead and make the deal. At least that's the story they're telling. Republic Bank's not happy. They filed suit over this. Green Dot down 6.7%, headed for its biggest decline since February in response to the collapse of this particular deal.
Not a good thing. Stock's down about 14.5% now so far this year, if you take that into account. Dave Wilson, thank you so much.
Well, let's get a check on the latest world. Oh, you know what? No,
Yeah,
I got to say,
come
you look for
on.
Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at The One Dave. You leave for one day, Dave. I forget
Tim,
everything, okay?
shame on you.
I'm sorry. All right, now we go to Washington, D.C. for a check of the latest world and national news. Hey there, Nancy Lyons.
Hey, Tim. Democrats and Republicans are finding common ground over Facebook. The social media giant is facing growing bipartisan criticism after a whistleblower accused it of putting profits over public safety. Frances Haugen testified on Capitol Hill today and explained how the company uses algorithms to deliver harmful content to keep its users, mostly children, more engaged.
Facebook knows that its amplification algorithms, things like engagement-based ranking on Instagram, can lead children from very innocuous topics like healthy recipes. I think all of us could eat a little more healthy. All the way from just something innocent like healthy recipes to anorexia promoting content over a very short period of time.
Haugen says lawmakers need to take action. They say they'd like for Facebook CEO Mark Zuckerberg to testify before their subcommittee. Drug maker AstraZeneca has asked the FDA to authorize the emergency use of an antibody treatment to prevent COVID-19. The company says the treatment would be the first long-acting antibody combination to receive an emergency use authorization for prevention. The FDA has authorized 3 other antibody drugs. 2 of them can be given after a possible COVID-19 exposure to try and head off symptoms. AstraZeneca's drug would instead be given as a preventative measure. U.S. Secretary of State Antony Blinken is calling on the world's most developed countries to take on and counter widening gaps between the rich and the poor. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, you are listening to Bloomberg Business Week. Oh, the conversations we have with Dave Wilson while we're in
Just
the
talking
studio.
stocks.
Just talking, yeah, that wasn't stocks.
Oh, okay.
It happens to do with the most read story in the Bloomberg terminal, but you'll have to wait to hear about that one. This one, though, is by our Catherine Doherty, and it talks about Blue Ocean Technologies launching an alternative trading system, and it's going to let investors buy and sell equities outside traditional U.S. market hours. Did you hear Dave?
No, I didn't hear Dave. I'm just laughing because does everybody want to work more? That's why I'm laughing. I saw this story earlier today, and I immediately thought to myself, does that mean that everyone's hours, if trading hours change, does that mean everyone's hours change? And then I also thought, have we learned nothing from Bitcoin's volatility and being able to trade Bitcoin 24/7? I think it was Michael Regan months ago had this great column about Bitcoin.
What do you say?
He said, if you're the CFO of a company, do you really want to wake up on a Saturday morning and having Bitcoin on your balance sheet and see that, the value of Bitcoin drop 15%?
No.
I'm paraphrasing here. This was months ago that I read this story. It stuck with me, though.
But think about it, right?
Yeah.
It's already, it feels like 24/7, and this certainly confirms some of it. It's a New York-based financial technology company. They're going to allow clients worldwide to trade securities 24 hours a day. The president and COO saying this in an interview. And they're going to facilitate trading with its broker-dealer clients. That's going to start Tuesday following a beta testing period that began in June. Don't you miss those days? I mean, this is,
Yeah,
I don't know.
I'm going to
Maybe
sound like a
showing my
Luddite when I
age.
agree with you.
I know, but I mean, when there really weren't answering machines and like you missed a call, I don't know.
I don't know what you're talking about.
Like I feel so guilty.
No.
I've told people, like if I put my phone down and I'm not checking things, like I do feel sometimes guilty. Sometimes I don't, but sometimes I do.
Let's talk about the hours and where they are now. Okay, so in the U.S., a typical trading day starts with pre-market trading at 4 a.m. in New York. It continues during normal market hours. Those are, of course, 9:30 to 4. And then it ends with aftermarket trading that lasts until 8 p.m. Blue Ocean Session, though, will give subscribers the ability to buy and sell from 8 p.m. to 4 a.m.
So all the time, basically. Yeah, I don't know. I don't know what this, and they talk about you can manage risk overnight. That's part of the selling thing, I guess. 24/7. Here we are.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. Green on the screen right now. The Dow, the S&P, NASDAQ all rallying, holding on to gains. Dramatic rebound from yesterday's sell-off. Do want to begin, though, with natural gas. Highest close in 12 years. Natural gas jumping today as global gas supply shortages stoke concerns about American shortages. Natural gas surging 9.2%, 6.29 now per million BTUs on natural gas. West Texas Intermediate crude up 2%, 79.19 a barrel. The Dow, the S&P, and NASDAQ all higher. S&P up 57, up 1.3%. The Dow up 414, up 1.2%. NASDAQ up 214, up by 1.5%. The NASDAQ 100 index up 1.7%. 10-year yield creeping back up to 1.52%. Spot gold down 0.6%. 17.60 the ounce. And Bitcoin, major story today, closing in on 50,912 right now. Bitcoin rallying today by 3.9%. Recapping, 10-year yield 1.52%. S&P up 56, up 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Nearly 9 months into Joe Biden's presidency, scores of executive branch positions remain unfilled. The logjam underscores a major problem with U.S. political appointments. There are too many of them. About 4,000 federal workers are appointed by the president, and 1,200 of those require Senate approval. As the number of positions needing confirmation has grown over the years, so has the partisan rancor surrounding them. As a result, the confirmation process now takes more than twice as long on average as it did in the 1980s. The White House and both parties in Congress must act to reform this broken system. The country's leaders might not share many priorities, but building a capably staffed bureaucracy ought to be one of them. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, we've got just about 10 minutes left in today's trading session. Let's talk about it. Let's get to the drive to the close. Ann Milletti is back with us, head of active equity over at Wells Fargo Asset Management. $604 billion in assets under management in total. She is with us on the phone from Milwaukee, Wisconsin. Ann, how are you?
I'm good, Carol. How are you?
Hanging in there. I feel a little whipsawed based on the market trade because depending on what day, you're either up or you're down by more than 1%, especially on the S&P. What does this tell you? I mean, volatility is back, but is there something else going on that we should be aware of as investors?
Well, I think we've gotten a little bit spoiled. I read someplace today that it's been more than 9 months since we've seen a 5% correction. So that's the longest time, the fifth longest streak since 1970. So
yeah,
I know it's been a long time, but since 1970, that was the surprise to me.
What does that tell you? What does that mean?
Well, confidence really has been around, and it's not surprising, right? Economic strength has been in place with people back to work, people back to business, businesses reopening. We know Delta probably has peaked, so that while that brought a scare, kind of a secondary scare, into the market, it wasn't enough to really hamper consumer confidence and business confidence. So I think what's changed, though, is the confidence in global growth with the challenges we see out of China. We also know that we have the Fed likely to stop asset purchases in November. And then we also know that there's some wavering on whether inflation is transitory or not. That coming directly from the Fed now, too, not just from investors. And so all of those things, I think, are creating more volatility in the market and more uncertainty. Although, the economy seems pretty strong, consumers are still in a good position to spend, rates still remain low. So there's a lot of positives, but there's more gray skies out there. I guess the days are getting a little bit shorter, just much like we're seeing in the fall.
Yeah, that is certainly the case here in New York as well. And I'm wondering, though, about something that Carol referred to, and it's sort of like the indecision of the market, right? Up, down, up, down, up. For the last 5 days with in excess of 1%. It's sort of like if we were talking about a single stock, we'd say the stock really doesn't know what direction to trade in. Are we seeing that on a market-wide basis, and why?
I think it's not unusual for volatility to pick up. And, the market doesn't like to make it easy on investors, right? I mean, very often, I get asked, it's not uncommon for people to ask, would you buy on the dip? And it's not easy to do that. It's never easy to say, go out and buy. And so the last couple of days, it hasn't felt good to go and do that. But again, with a lot of the dynamics in the market being so strong, with revenue growth being so strong, yes, there's pressure on the supply chain, but demand is incredibly strong yet. There are things out there that investors want to buy. So I don't think it's unusual to see this volatility. I think we're going to continue to see more of it as you're going to see some good news followed by some news that's questionable.
And it feels like it's explainable. Like when you say that revenue growth is strong, and our Gina Martin Adams has talked a lot about that too, that when you look at top line growth expectations for companies, especially as we get ready for the next earnings season, those are staying put, or, they're high, or that we're seeing growth, or they're being raised. It's when you start looking at the balance sheet and you look at some of the cost side of things, but we can explain that away, and it will go away provided those supply chains, rebalance. Can we assume that they will rebalance, or is there something much more structural going on in our economy when it comes to supply chains that maybe we're missing?
Yeah, I think that is the million-dollar question, because if we were talking a year ago, Carol, I would have said we would have worked our way out of the supply chain issues by now.
Yeah.
But, what we haven't seen is demand tapering off. Demand remains strong. The consumer remains kind of relentless. They're in good shape. Their balance sheets remain in great shape. And we continue to see shortages of labor in the supply chain, right? So, truck drivers remain a huge challenge as well. So, and certainly on factory lines, there's labor challenges as well. We see that in the Midwest as well as other places. So there are things that are fixable, but I think there are some structural challenges with the supply chain that may not get fixed. What I'm most worried about is how long will consumer confidence stay strong? Are there things that are going to challenge consumer confidence, right? So while their pocketbook might feel okay, that might get challenged if we continue to see the things like higher energy prices. That's going to sting over time if, commodity prices and other things continue to rise at a rapid rate.
Hey, Ann, just in the last 30 seconds that we have with you, how long do you see those challenges persisting? High lack of workers and, look, actually the trouble getting workers, those truck drivers you talked about?
Yeah, I do think it is something that's going to take a good part of next year to continue to fill. There are, there's no shortage of ways that companies are trying to bring those workers back, but it hasn't been that successful.
Yeah.
And so it's going to take a good long time to do it, probably through the end of next year.
Ken Griffin of Citadel says that maybe it's time for the president to give an address, and it's time for America to get back to work. He certainly was pretty strong with his message. All right, Ann, thank you so much. Ann Maletti, head of active equity over at Wells Fargo Asset Management. Just a few minutes left in today's trading session, just coming off our highs of the day. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube, counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Shonali Bassick in for Taylor Riggs, counting you down to the closing bell. Here to help take us beyond the bell, it's our global simulcast team. Carol Masser and Tim Stenovic bringing together all of our audience across Bloomberg Television, radio, and YouTube. And Carol, this is, I guess, a buy the dip moment. Are you buying into this buy the dip moment?
I don't know. I feel like every 24 hours we go through a different cycle with the S&P. We're up, we're down, we're up, we're down.
Employed, Carol.
It does keep us employed. I've been watching Bitcoin, though, up about 4.5%. Pick your crypto. Ethereum is up about 3.3%. We saw Bitcoin in particular go above 50,000 for the first time in some time. So we're definitely seeing a buy-in trade, Tim, when it comes to that today.
Look, Carol, you're absolutely right. For the fifth straight day in a row where the S&P 500 has changed directions from the previous day, 4 straight moves of 1%. So I guess people are buying the dip. They're just not buying it on the same day that we're seeing stocks move lower.
It's interesting, of course, Carol, you were talking all things crypto at the Global Invest Summit of Bloomberg and with Michael Sonnenschein and some others, but we're also hearing from that same summit that people are saying, look, it's time to liquidate your assets. It's a great time to Brookfield Asset Management discussing it, the same as Blackstone as well, but it feels as though the retail investor, or indeed the general investor, is still wanting to get in on the market.
Yeah, and it's so interesting. Is this because of the market levels we're at? Of course, that must be some of it, but then also the idea that taxes, and if capital gains dips in next year, then maybe right now is the dip to be selling into.
Yeah, and the contrarian point to that is Chris Montague over at Citigroup basically talked about how a lot of their long positions had been unwound to such a degree here that there was really no place else to go but up, at least when it comes to a lot of those big cap tech stocks. You're looking at a NASDAQ composite right now that looks like it's going to finish the day higher by about 1.2%. The NASDAQ 100 up about 1.4% here. So not quite recouping all of yesterday's losses, but definitely a respectable rally to be sure. The S&P 500 up about 1% on the day, 45 points. The Dow Jones Industrial Average up about 0.9%, not high enough where we were quoted in Dow points, but 0.9% if you're counting there. And let's take a look at the Russell 2000, because I think this is interesting, Carol.
Yeah.
You did not necessarily see the re-embrace of some of those cyclical trades, some of those value names in the same way that you would think you would if you had a true rebound rally going on. The Russell 2000 higher by about 0.5% here, and this was a pretty tepid rally here with regards to the Russell, pretty tepid underperformance as well.
I love the research that was coming on. Buy the dip momentum has failed for U.S. equities. We got that from Bank of America today. Instinet coming out and saying S&P 500 tends to end up the week after dips like the one we have just seen. So there's tons of research to make every argument that's out there, and we'll just have to see what the trend is, especially when we get that jobs report, Caroline, on Friday. I think that will help also set the tone.
All eyes on Friday, all eyes on the inflationary pressure as well in the market when it comes to commodities, all eyes on, though, from a sector perspective, most in the green on the S&P 500 for our radio audience. Yes, the S&P 500 is up 1.3%. Your leaders, well, it was beneficial for yields to rise. Finally, the banks get a bit of love, so we see the financials doing well, up 2.4%, insurance companies doing well, but then we got the buyback element of this. Semi-equipment, that was one of your worst performers yesterday, but the chip stock's doing well today. Media looking good as well. So we're seeing a strong movement into the high. Only 2 sectors actually in the red when you look at this particular sectoral breakdown. And it's actually those that usually do well when bonds do well. So when bonds sell off, real estate goes lower, utilities a little bit lower as well.
All right, let's get to some of the gainers today. Carl Icahn on the prowl, disclosing a stake, a 4.91% stake in Southwest Gas Holdings. That stock was up about 6.6%, really pushing for the U.S. company to scrap a potential purchase of a pipeline from Dominion Energy. This was reported by the Wall Street Journal, so you definitely did see a pop in that name. Invesco, also among the top in the S&P 500 500 today, up almost 5.4%, 25 and change at the close. Financial Times coming out and saying Invesco State Street maybe still apparently talking about plans to merge their asset management operations. This is according to person familiar. There's a lot of other particulars. They apparently, State Street has held talks with other companies, so there's a lot of moving factors, but nonetheless, Invesco up 5.4%. Netflix, top in the S&P 500 and the NASDAQ 100. Cowen saying it surveyed 2,500 U.S. consumers. I wasn't asked, but nonetheless, that survey suggests it is still perceived as having the best content among video platforms. Bridgerton, anyone?
So Squid Game. Squid Game. Okay.
All right, Netflix up 5.2%. Cowen, by the way, rates the stock and outperform. Price target of $650. Netflix closing at $634 in change. Tim, aren't you a Bridgerton fan?
Yet, have you?
No,
I haven't
It's
watched
all
it.
about the crown.
See, this is look. It's a wide breadth of content
See?
that appeals to everybody, and that's what
Exactly.
Cowen certainly saw. Let's take a look at some of the notable decliners that we saw today. The real estate REIT, or the data center REIT, I should say, Equinix, finishing the day down lower by more than 3%. It was under pressure. Credit Suisse downgraded it to neutral from outperform, cutting its price target to $731 from $941. The reason, folks, supply chain pressures disrupting it. Credit Suisse says Equinix's supply chain disruption will impact its customers' ability to deploy equipment. We're also keeping an eye on Lordstown Motors, finishing the day down by more than 11%. The electric vehicle startup plunging today, falling to its lowest level since August 23rd after it was downgraded at Morgan Stanley. Adam Jonas cut it to underweight from equal weight, lowered the price target down to $2 from $8, trading at $5.20 right now. Merck finishing the day down just fractionally by 1.8%. Yeah, so that held on the day. Some interesting price action. Not really any news today, but it does follow 4 days of gains. The last 3 as a result of the good data that Merck announced late last week on the COVID treatment, taking a pill form, but finishing the day down by more than 1.8%.
Bit of profit taking, and maybe we see what's happening in terms of the FX markets, a flip reversal, what's happened in the last couple of days. This sentiment that we've seen wanting to see, well, a search for a haven means that actually today we go the other direction. For our radio audience, I'm looking at Japanese yen off by 0.5% when we look cross-asset. The Swiss franc also having a down day, off by 0.3%. They'd been doing well against the US dollar in the last few days. Today, it's the Bloomberg Dollar Index that is higher by 0.2%. So the moon music really changes when it comes to the FX market. That spills into what's happening. Well, commodities still managing to find some green when you have the dollar higher. Extraordinary moves happening, though, across the board in commodities. Oil still on a tear after OPEC Plus surprises without upping its production less than many had expected. But gas, can we talk about gas? 12-year high in the United States as we worry about supply issues here. We're looking at what happened in gas in the UK, record high moves. We're seeing significant push higher as we see the supply constraints continue. That feeds into what happened in the bond market. UK gas prices pushing up so high, inflationary worries so significant that borrowing costs are rising. United Kingdom 30-year yield up 7 basis points, but actually we're seeing yields push higher across the board, Romain.
Yeah, and this was a big deal, and I mean, I think we kind of missed it earlier with the effect that the natural gas situation is having on gilts there. And of course, we are expected to hear from Boris Johnson a little bit later here. Back here in the U.S. here, you're looking basically yields higher right across the board here. It was actually pretty heavy volume here on this day. One interesting thing, though, I want to point out to people, and it's not on the screen, but the break-evens here, particularly on the 10-year, right back now to some of those June levels here. You're starting to see that tick back up around 2.5% right now, and that gives you some sense here about that reflation trade that we were talking about so much about last week. That even amid the sell-off here, there does seem to be some buy-in to the idea here that inflation is persistent, it is here to stay, and it will be a part of the trade going forward, Carol.
Well, and I guess, when you talk about the trade going forward, the dip buyers, we will have to see whether or not we continue to see increased volatility. We get a day up, we get a day down. We see the 5th day in a row, right, where the S&P has been changing direction, Tim. So, Dave Wilson was talking to us about that. The moves are getting certainly a lot larger, too, on that.
Yeah, we spoke to Anne Milletti from Wells Fargo a few minutes ago. She said we've gotten a little bit spoiled, but what we have learned recently is that the Delta variant was bad, but not as bad as we had thought, and we could be turning a quarter, at least when it comes to the virus, so some good news there.
Yeah, and Shonali, I mean, what's also interesting is that we're seeing this inflationary pressure, but we're going to be talking so much more about whether the likes of crypto has been some sort of inflation hedge, and a lot of talk about the future of crypto, about Bank of America's call as well. You were talking about it earlier, Carol, but Shonali, Bank of America, we're discussing, finally saying, look, it's here. It's not just a small asset class. It's sort of across the Rubicon.
And they're talking about all asset classes too in crypto. And you take a look at the prices today. Yes, Bitcoin was higher, but Dogecoin was 3 times higher, believe it or not, guys. Some of the favorites were down on the day, so you really got to wonder what is fueling the price movements here.
Well, when you talk about buying the dip, Michael Sonnenschein, who's the CEO of Grayscale Bitcoin Trust, he talked about that these declines in Bitcoin, specifically the volatility, it's a buying opportunity. Check it out.
The Bitcoin price has moved around quite a lot, even recently. And so when we see dips in prices, we often see that as an opportunity and investors moving in to buy those dips. If they fundamentally have not changed their perception or their conviction in an investment, but they can buy an asset 10, 15, sometimes 20% cheaper than they could a day, 2 days ago, well, that's a compelling opportunity.
All right, so Michael Sonnenschein, CEO of Grayscale Bitcoin Trust, and many will say, listen, this is his world, and of course he's going to say these are buying opportunities, but increasingly we're seeing Jay Powell talk about it. We see the Fed increasingly saying we're not going to ban crypto. We're seeing established financial firms that this is becoming much more of a normal part of what they're doing, Tim.
I think so, but at the same time, and look, we should note that Bitcoin is really at its daily highs, higher by 4.8% right now. I still think it's really early days. There's so much confusion that consumers have about what crypto is and what it does that, look, it's very complex and a lot of consumers still don't understand it.
And need regulation.
Yes.
And many feel that's what Ken Griffin was saying at Citadel as well before they'll start trading it. Meanwhile, of course, that does it for our cross-platform coverage of the market close, Bloomberg Television, radio, and YouTube. We're going to be back tomorrow. Same time, same place, maybe talking about crypto too. So clearly, this is an area of focus going into it. But really, we want to be digging into a new conversation. We're talking crypto. We're talking more broadly technology now. Bloomberg's Carol Massa standing by with key voice in that sector.
Caroline, thank you so much. And we are going to continue our cross-platform coverage on radio, TV, and on YouTube. We are so delighted to welcome to Bloomberg Michael Dell, of course, Chairman, CEO of Dell Technologies. Keep in mind, when he first started his company back in 1984, it was Dell Computer Corporation. He was 19, and his journey on creating this company, it's in his new book. It's called Play Nice But Win, A CEO's Journey from Founder to Leader. And we're going to talk about that book in just a moment. Michael joining us from Austin, Texas. Michael, welcome back to Bloomberg. Thank you so much for being with us.
Thank you very much. Great to be with you all.
Hey, listen, we are going to talk about the book. We've got to, though, ask you about the big tech picture at this point, because we've seen a lot of pressure on big tech companies in the stock market. There's a lot of big tech companies talking about, hey, the whole world is becoming digital, the digitalization of everything that we do, and that pace has just been picked up as a result of the pandemic. Yet tech companies right now are forecasting long-term growth a little above GDP. You guys, your outlook is for 3 to 4% annual sales growth. How do we square those two, that we are increasingly becoming digital, but growth is not so dynamic?
Well, I think it will be a sector that continues to outgrow the economy. And, if you think about the way technology is being used, it's now going way beyond the IT departments. And, it used to be when we were selling things, it was to the IT departments, and now, technology is a fulcrum for everything. So I think as a sector, it'll outgrow GDP probably by a significant amount. We'll see, but certainly, this year has been great for our company. 15% growth in the last quarter, and second half is looking strong as well.
Yeah, and shares this year significantly higher as well, Michael. I'm wondering about how much that IT spend from companies around the world was pulled forward during the COVID-19 pandemic, and if you have concerns about slowing growth since so much of that spend was pulled forward.
If you think about this from the perspective of a company or an organization, sort of the only thing that worked during the lockdowns was digital technology. And so companies are just accelerating all their investments in that. And if you think about hybrid work, that feels like it's becoming more of a permanent way that work gets done. And that's an enormous demand stimulant for us. and certainly a great, tailwind. There are, 700 million PCs out there on the day that, Windows 11 gets introduced that don't run Windows 11. So you put all that together with the expansion, feels like, and certainly there have been supply chain challenges, even though we're shipping record numbers of machines, more than we've ever shipped. It feels like the demand growth is going to continue in a pretty robust way here.
Well, help me with those supply chain challenges, Michael. I mean, computing is on the long list of industries that have been hurt by the semiconductor shortage at this point. When do we start to see that supply and demand get back in step?
Well, it takes about 3 years to build a new semiconductor plant. So, when did the we're only 18 months into this, and so if you believe there's a demand acceleration that's significant, it's going to take a while for supply to catch up with demand, we're all challenged by that. As I said, even though we shipped more last quarter than ever, the backlogs are still at record high levels.
Is there panic buying, though, do you think, because of concerns over supply chain, that we're seeing some of that, double ordering being done by companies just to make sure that they've got what they need, and as a result, at some point, we'll see some kind of bubble burst as a result of it?
We've been watching the cancellation rates very carefully, and we have incredible data on this, and we haven't really seen that. What we've heard from our customers and partners is that our supply chain is generally functioning better than others. And while they might not, like the lead time that we give them, it's highly predictable and reliable. Haven't really seen, signs of distress there in terms of people ordering and then canceling, and it hasn't been a factor.
Hey, Michael, the chip shortage has revived talks of European or U.S. hardware or chip manufacturing. I'm wondering if you think that that's necessary at this point.
I think it's a good thing. We have not really had, industrial policy, right, has been a kind of dirty phrase that nobody wants to talk about. But when you have China investing so aggressively in these strategic industries and, the U.S. and Europe not, it creates a real challenge. And, the theme in supply chains has been resilience and moving from just in time to just in case. And, given the importance of all these industries to the future and everything that's going on in 5G, I think having government support to create the infrastructure, for our technology future, semiconductors being an enormous part of that, I would be in support of that.
Hey, Michael, one more thing on supply chain. I mean, you guys seem to have done a better job at kind of managing your supply chain than some of your peers and keeping yourself supplied with components. How is that possible? And I am curious if you're eating some of the higher costs here, or ultimately are higher costs being passed off to consumers?
Well, there's definitely been component and cost inflation, and that's something that we all feel, and it's a shared experience, if I can call it that. We have had a supply chain strength in our company for decades, and I think it's proven itself well, during the last year or so. When a lot of companies outsource things, I think they also outsourced, in many cases, a complete understanding of all the components that go in to these machines. And you're seeing instances where a $50,000 product is held up by a $1 part. You really have to have a detailed understanding of the entire supply chain in order to run it efficiently and effectively.
Hey, your book is a great read, Play Nice But Win, and it talks about your journey from founder to leader, and you really weave in the creation of your company, but then you also weave in taking the company private. It's really a fun read. You talk about acquisitions and the transformations you were making at your company. Now, one of the things that came up recently at an investor day is what you expect in terms of further M&A for the company, and also some rumors of maybe taking it private again. Is that a possibility?
Don't have any plans to do that.
Okay.
We did talk about our capital allocation. Now that a couple of days ago we got a double notch upgrade by S&P to investment grade. We're doing a large share buyback, going to issue a dividend starting in the first quarter. And, we paid down an enormous amount of debt and feel really great about how the company's positioned going forward. And look, what we said is that, don't hold your breath for sort of massive M&A like the kind that we did, when we did the largest acquisition merger ever in tech. It'll be on a lot smaller scale.
Well, what are the areas of interest that pique your interest? What are the areas of tech right now where you think there is an opportunity to expand to?
So, we have an enormous business in a huge TAM in cloud infrastructure and all things end user computing and software defined data centers, and really enabling our customers to accelerate their digital transformation. Multi-cloud, security, edge, 5G, these are all new multi-billion-dollar businesses that we're building, and we'll do that organically. We'll do it with partnerships, and we'll do it with selected acquisitions to help us accelerate.
Hey, Michael, I want to get back to the book and talk a little bit about it. As Carol mentioned, it is a great read. The title really struck me. Play nice, but win. The idea of playing nice is something I think a lot of parents tell their kids, but your parents said play nice, but win. How did that stick to you?
Yeah, it's one of my first memories as a child, and this is what my parents told me and my two brothers when we would go out in the street and play ball. And it's been a relatively straightforward and kind of unifying principle that we've talked about Adele a lot. And look, I think dealing forthrightly with integrity and honesty and building a reputation over time matters, and pays dividends over time. And look, winning is a part of this. It's who we are, and you've got to balance the two and do it successfully. I think I've been able to do that for the most part. The book talks about all of that, and many occasions when it didn't exactly go the way I planned, but we learned from it along the way, and that's what life is all about.
So was it always easy to play nice when you were dealing with the likes of someone like Carl Icahn? I mean, it's really kind of fun, the passages in the book, to be quite honest, and dinner at his house, and it was interesting to hear the exchange where you were like, what are you going to do with the company? What's your strategy? But was it hard to deal with someone like that, or what was that experience like?
It was very hard. I didn't really have much experience dealing with somebody who would just go on television and lie. That's not something I had experienced very often in my business career. But ultimately, as I talked about in the book, I did go to his house and confront him, and really saw that he didn't have any plan whatsoever for the company, and to him it was just a big poker game, and it turned out to be way more difficult than I thought, as was chronicled on Bloomberg television and radio very extensively.
I remember it.
It was a story that never ended until it did. And fortunately, we were able to accelerate our transformation. Our shareholders got some of the benefits of our transformation if we were successful, which we turned out we were, without taking on any of the risk. And I learned how to face down Carl Icahn. So there you go.
Yeah. Hey, I'm wondering, Michael, if you miss the days of running a company that's private, that doesn't have a report card available to you each and every day, Monday through Friday, from 9:30 to 4 every day, where you watch the company's stock move. Because you do talk a little bit in the book about the way that big swings in the company's stock would make you feel, and the way that you thought that analysts and investors were missing it. Do you miss the days of not running a public company?
Well, I've done both, right? And the key for us was really putting the company on a different trajectory. And back in 2012 and 2013, the markets really didn't give us permission to go invest in those new areas. Now I think we're in a different spot, new capabilities, new growth rate, and new trajectory. And, we also reignited that entrepreneurial spirit, which was the formation of the company, and very much kept that alive even as we've transitioned back to being public again.
Well, it's interesting too, and we've really leaned on, I think even more so during the pandemic, our leaders, right, of companies to help us get it through. I think about Black Lives Matter. And, one of the things we wanted to ask you, and it feels like from reading your book, you don't play around too much or careful around politics. And I can understand that for CEOs. But, your home state of Texas, I have a lot of family in Texas. You seem to be, you really love that state. And you write a lot about it in your book. How do you feel about things like the abortion law and the voting rights one? Would you have spoken out about?
Yeah, I have spoken out about voting rights, and certainly we've communicated with our team members about some of the recent laws. Look, I would much rather see our policymakers focus on education and infrastructure and broadband and the things that will help the state continue to be successful. And as we've communicated to our team members, our belief is that they should have more access to healthcare, not less.
Mm-hmm. Do you worry though about some of these issues that it'll hurt Dell's ability to attract talent, especially in Austin, or generally speaking?
Haven't seen that problem yet. We'll see how it plays out, and again, our company will go where the talent is, and let's see also how the courts rule on these things, and I think there's still a lot that we don't know about how this plays out.
Hey, Michael, I want to stick on talent because we have spoken to executives in recent months who've said, hey, the labor crunch that we're seeing, it's really across the spectrum from hourly employees all the way up to executives. Have you had to raise wages to attract and retain talent?
Well, you're always adjusting, compensation and benefits. I'm pretty pleased with our attrition. Our data says, we're in the kind of lower quartile of attrition. So haven't really had an enormous challenge there, as I know many companies have. And look, our job is to create an inspiring and passionate environment where people can do their very best work. And we attract a lot of young people into our company, give them those opportunities. I think if we keep doing that, we'll be just fine.
EMC, it is a company that we know, we've all talked about it, the king of growing storage device market. We know cloud computing is changing all of this. We were talking with some of our colleagues, a former EMC executive telling them that EMC was once the last great storage companies. There'll never be another one. So what is the future of that market in your view, and how do you think Dell specifically can benefit from that?
Well, the interesting thing is, if you peel back the onion on just about anything that's going on, you were talking about crypto earlier.
Now is Michael Dell's new book, and he's like, I know Michael, and he goes, really smart guy, really innovative guy, and it was just kind of interesting. And he talked about how you reinvented your company. When it comes to innovation, reinvention, what are the technologies that you think we should be focusing on? What gets you excited? Is it crypto? Is it AI? Is it something? Is it the metaverse? What do you think is interesting? Because reading your book, you've been involved in the tech space since you were a kid, and I just wonder what really catches your attention now.
Yeah, the power of AI to again use all this data to upend and reinvent every part of our world and society is incredible. I think there are going to be incredible innovations in the intersection of the biological and computational sciences. In all the areas you talked about.
Yeah.
It's hard to predict exactly how all these things are going to evolve, but when you have these powerful ingredient technologies coming together, and look, you have an enormous amount of risk capital right now that's going after these problems and even harder hard tech problems. I think that the future is super bright for humankind.
Well, I wonder from specifically a hardware perspective, given your experience in hardware, how this data is manifested, or how these experiences are manifested when it comes to hardware. Is it smart glasses? Is it wearable technology? Is it traditional PCs? I mean, in terms of hardware, what excites you?
Well, the world is really a combination of hardware and software and AI and machine learning, and you kind of need all three of these. Most of the data in the future won't be human to machine. It'll be machine to machine. And this is this idea I was talking about earlier about everything becoming intelligent. And if you step back and you look at what's happening, again, technology is kind of the fulcrum for all progress in the world, and that means that that there's just going to be a lot more data. It's got to be turned into insights and actions and results, which means companies have to express their competitive advantage with software and with AI. But of course, AI is eating the software is eating the hardware, but it runs on something, right? And we create that system, that multi-cloud system that allows all those capabilities to be created.
Listen, Michael, we've got to run. Thank you so much, though, for carving out such a big chunk of our time, and we wish you well with the book and with your continued success at the company. Thank you so much. Michael,
you bet. With you all.
You bet. Michael Dell, he's chairman and CEO of Dell Technologies. His book, Play Nice But Win, A CEO's Journey from Founder to Leader, and even the appendix of the book is just things he believes in that helped him in his success. So it's a really great bunch of pieces of advice. Great conversation.
Yeah, it was, and a great book. The book out today, Play Nice But Win by Michael Dell. Let's get a check out the latest business news. Standing by is Charlie Pellet.
Hi, thank you very much. And today we had the Bulls playing nice, but they won with the S&P up 45 points today, up by 1.1%. The Dow up 311, up 9/10. NASDAQ up 178, up by 1.3%. This update is brought to you by Barish and McGarry, lawyers for the 9/11 community. For 20 years, they have been fighting for those who continue to get sick from the 9/11 toxins. Free health care and compensation are available. Visit 911victims.com. 10-year yield, 1.53%. 10-year down 15.30 seconds. Gold down $9 the ounce, down 0.6% to $17.59. West Texas Intermediate crude up 1.8%, $79.01 for a barrel of WTI. Bitcoin, major story today, up 4.4%, 51,000 right now, 51,189 on Bitcoin. And natural gas, a major story today. Nat gas surging 9.6%, now it's $6.32 per million BTUs. Dell CEO Michael Dell says the tech sector will outgrow GDP. He also says his supply chain is functioning better than others. And he says, don't hold your breath for large acquisitions. And in a conversation that wrapped up moments ago right here on Bloomberg Business Week, he also discussed work from home and how that is affecting demand for his company's products.
Sort of the only thing that worked during the lockdowns was digital technology. And so companies are just accelerating all their investments in that. And if you think about hybrid work, that feels like it's becoming more of a permanent way that work gets done.
Dell CEO Michael Dell, interviewed right here on Bloomberg Business Week. Dell shares up today by 0.7%. Hertz is tapping a familiar face to lead its turnaround by naming Mark Fields, a former CEO of Ford, as its interim CEO. Hertz shares up today by 9.9%. T-Mobile cutting the price of its new 5G wireless home broadband service by 17%, stepping up efforts to steal internet customers from cable and phone companies. T-Mobile down today, lower little change down less than 0.1%. Recapping 10-year yield 1.53%, Bitcoin above 51,000, S&P up 45, up 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Let's head now to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by.
Hey, Tim, thanks. Senators say Facebook appears morally bankrupt. They heard today from a former Facebook executive who says she has evidence the company deliberately downplayed the dangers of harmful, divisive, and misinformed content in an effort to make money. Frances Haugen says the company uses algorithms that she says promotes this divisive content and in turn makes users feel worse.
Congress can change the rules that Facebook plays by and stop the many harms it is now causing. We now know the truth about Facebook's destructive impact.
Haugen recommends making all Facebook research public. She says unless the incentives change, Facebook won't. President Biden is in Michigan, where he stopped by a worker training center to promote his bills to finance infrastructure, roads, and transportation, as well as education and competitiveness.
The president spoke as he continued to negotiate with Democrats who want to trim the proposals and Democrats who want to expand them.
All those investments that fuel the strong economy, we've taken our foot off the gas. I don't know what's happened. These bills are not about left versus right or moderate versus progressive. To oppose these investments is to be complicit in America's decline.
The president has also faced criticism that he hasn't stressed enough the popular elements of his proposals, allowing the original $3.5 trillion 10-year cost to be the focus of attention. In Washington, Irv Chapman, Bloomberg Radio.
The nation's trade deficit is growing more than expected. Figures out today show the gap widened by $3 billion in August, when analysts expected an increase of $500 million. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So we know Senator Elizabeth Warren has said that revelations about investment transactions last year by some Fed officials call into question Jay Powell's leadership of the U.S. Central Bank. She's been talking about this in a big way. Having said that, our own David Weston getting ready to catch up with Senator Elizabeth Warren. Let's listen in to the simulcast.
From Massachusetts. Senator, thank you so much for talking with us.
Thank you. I'm delighted to be here with you.
There's a lot going on in Capitol Hill right now, but some of it does involve the Federal Reserve and the chair, Jay Powell, and particularly some of the other people participating. There's a lot we don't know. Every day we learn something new, it seems like. I guess my first question to you is, should we delay the time for appointing the next chair until we sort through all this? Because it could take some time.
Well, look, I've already said I can't support Jay Powell for renomination. So my view is he ends his term, we put somebody else in place, and I think the Fed is going to be better off, and I think our economy is going to be safer.
Okay, somebody else in place. Let's talk about who that somebody else might be. Are you talking with the White House at all, giving them any suggestions? I mean, you've told me that you think Lael Brainerd, for example. You've read some of her writings. You've been impressed by her.
Yeah, I'm not going to talk about private conversations, though. You know, my view on this is right now the question is Powell to nominate or not renominate, and I am in the let's not do this.
Are there other Democratic senators who are with you in that position? We heard you at the hearings. I didn't hear Sherrod Brown take a position exactly. Some Republicans have come out and said they support Jay Powell. Are you hearing from some of your colleagues that they'd at least be open to resisting Jay Powell?
You know, I never want to represent anybody else's point of view, but I am not the only person who has been concerned about his approach to regulation. You know, and I just want to put this in a little bit of context. The way I think about this, I think back to 2007, 2008, when the Fed would not step up and regulate the giant financial institutions. You know, good on monetary policy, but not step up and regulate those financial institutions, afraid to rein them in. And bit at a time, they just kept loosening those regulations until those giant institutions took on too much risk and crashed the whole economy. I came to Washington to make sure that never happens again. So what I want to see now is a Fed chair who cares about both parts of the job. Monetary policy, very important, but willingness to regulate giant financial institutions, equally important.
I haven't talked to anybody who was around for 2007, 2008 who wants to repeat that.
Yeah.
It was not a pleasant experience. Dan Tarullo was my law school classmate, actually, and he could tell you about it. Right. But the question is, how close are we to that now? I mean, how far have we come back from where we were when we had the height of regulation?
So here's what troubles me the most, is that during the past years of, while Powell has been chair of the Fed, every regulatory move has been in the same direction, and that has been to weaken the regulations. Not huge headline grabbing every time, although there have been a couple, but it's been always in the direction of weakening. That makes nominating him for another 5-year term a real risk. We know that some of the risks are already building up. So, for example, when the economy hit choppy waters last year during 2020, and the Fed had to race in and put a lot of support into that economy, the Fed's own report said afterwards, big banks would have lost $300 billion, with a B, dollars if it had not been the case that taxpayer dollars had been used to buoy them. I think that's a real problem.
So let's talk some specifics here, because
Sure.
you know this area so well. What you just referred to was short-term funding problems. That's been a problem around for some time. Regulators have said we have a problem. Why hasn't that gotten fixed?
You know, this is what troubles me right now. We need a Fed that is willing to stand up to the giant financial institutions. We need a Fed that is willing to push back. So I'll give you another example around this. You're right on short-term funding. I want to talk about the stress tests. You know, the stress tests are kind of like finals in school. And it used to be the case when the stress tests first came out after the 2008 crash, after Dodd-Frank was put in place, they were tough. And a lot of the financial institutions flunked. And they had to go back and they had to clean up their balance sheets. They had to change a lot of what they did. They had to divest from a lot of risky undertakings that they had. What's happened over the past few years is the Fed, under Powell's leadership, has basically shown the banks the test in advance. And then the banks, they're not dumb, they reverse engineer so that their balance sheet looks just right to match the stress test, but that also means maybe concealing all kinds of other risk. I always remember that in 2007, everybody said banks are doing great. They are so profitable. I mean, nothing's ever going to go wrong, till it did.
That's the banks, and some concerns about stress tests. Open book exam, as you suggest, is what it is now. What
Worse than that, it's get the exam in advance and come back when you feel ready to take it.
What about non-banks? What about shadow banking? Because that has grown enormously. Is that at this point even a larger risk than the banks?
You know, and again, referring to what happened in the 2008 crash, it was the non-banks as well, remember, that drove us over the cliff. It was the non-banks that actually failed and started taking down the whole economy. The shadow banks, we still have not done a good job of getting our arms around them. And I'll just layer on top of that the increasing risk posed by crypto and how slow the Fed and other financial regulators are to begin to get their arms around this. The parallels keep multiplying, I think I could say, and actually I'll pick one there. You may remember back in 2008, money markets, safest thing in the world, right? Right up until they broke the dollar, and the federal government was put in the position of either having to back up those money markets or watch the economy go further over the cliff. Now we've got something called stable coins. Unregulated, but surely they're safe, or at least that's what we keep hearing, but no regulation around this, no controls around this. And as more money flows into it, the parallel to what happened back with money markets at least has to be in front of the regulators. We need regulators who are willing to step up and exercise their regulatory tools.
So the regulators, it raises the question of which regulators. I mean, Gary Gensler at the SEC has said we need to look at stable coins. We heard actually Jay Powell at the hearings last week said they're a little like money markets. We got to watch that. Where's the best place for the regulation to come for stable coin? And do they have the authority under current statutory law?
So they have authority to do some of what they need to do. Right now, I believe the Fed should step up. I believe the SEC should step up. There's a question about Commodity Futures Trading Commission. In fact, as you know, the Treasury has put together a working group around this, around digital currency, around Bitcoin, kind of all the pieces. I also think the Consumer Financial Protection Bureau should be in there because of the risk that trading on unregulated markets can pose to individual consumers. So this is a time when we need all of our regulators to get smarter, faster.
When we talk about regulation up on the Hill today, we heard from a whistleblower with Facebook. A lot of disturbing claims about what Facebook knows, what it does. Give us your insight into regulating a social media company. And let me go back to the 30s. When FDR decided to regulate the securities industry, it was disclosure. That's basically the mechanism of the 33 Act, the 34 Act. Is disclosure the way to go at this problem, or do we need substantive content regulation?
So I'm actually going to back you up in history even before the 30s. I'm going to take you back to Teddy Roosevelt. Because that's how I look at this. Teddy Roosevelt talked about break them up. And you break them up so that you've got multiple competitors, so that multiple competitors can offer different kinds of services. And you know, that's not true now with Facebook. Just one example with Facebook. Your phone number. You and I don't have to be on the same phone exchange to be able to call each other with a phone number. But if you want to access somebody's Facebook page or you want them to access yours, you've all got to be in Facebook. That gives Facebook the monopoly that grows, and as it grows, that makes it grow more. A point that Teddy Roosevelt made about this back when is to get markets to function and to insulate them from pressuring Washington for protection means break them up. Break them up. When we've got lots of competitors in this market, no one dominates in that same way. So I got to tell you, that's where I start.
So finally, let's go to exactly that. Keep them from pressuring Washington. We've seen a fair number of hearings on Capitol Hill thus far involving Facebook and the other social media companies. A lot of documents asked for, a lot of information gathered. I don't think we've seen an awful lot of activity.
No, we have not.
Where is the market failure, as it were, in that? Do you think we will see activity, and when?
The loudest voice in this hall is Facebook's and the other giant corporations. They hire the lobbyists, they make the big campaign contributions, and even more importantly, they fund the dark money, the part that you never even see their fingerprints on it. They're the ones who undermine the basic premise of democracy, that everyone is welcome here, that everyone has an equal voice. And I think we're seeing that play out right now. So what I'm hopeful is that a lot of people are going to push back, particularly based on those hearings today, and that may start to move Congress off the dime.
Senator Elizabeth Warren, thank you so much for your time today. Really appreciate it.
Thank you.
Back to you.
All right, and that, of course, is our David Westin, Bloomberg's David Westin, who, of course, appears on Bloomberg Radio and Bloomberg TV, and speaking there with U.S. Senator Elizabeth Warren. All right, let's get another update on the trading day on this Tuesday. Let's toss things over once again to Charlie Pellet.
Thank you very much, and here's what's going on. This update brought to you by Withum. More than CPAs, they are trusted advisors offering smart business solutions to help companies innovate, grow, and stay secure in today's complex world. Visit Withum for more. Withum.com for more. Well, you heard it live right here on Bloomberg Business Week. Massachusetts Senator Elizabeth Warren talking about a number of topics, including Jay Powell's renomination.
I've already said I can't support Jay Powell for renomination. So my view is he ends his term, we put somebody else in place, And I think the Fed is going to be better off, and I think our economy is going to be safer.
It was an update on Wall Street. Stocks finished off session highs, but green on the screen, rebounding from yesterday's declines. Treasuries fell as investors assess the state of the economy before Friday's jobs report. Right to the numbers, the S&P up 45, up 1%. The Dow up 311, up 0.9%. NASDAQ rallied 178, up by 1.3%. 10-year down 14.30 seconds. 10-year yield 1.52%. Gold down 0.5%, $1,760 for an ounce of gold. Look at Bitcoin topping 51,000 once again, up 4.8%, 51,353 right now on Bitcoin. Natural gas surging today by 9.4%, $6.30 per million BTUs. Crude up 1.8%, 79 even a barrel. So again, recapping, we've got the 10-year at 1.52%, S&P up today by 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate that update. You are listening to Bloomberg Business Week. Carol Masser in our Bloomberg Interactive Broker studio. Well, underway this week is Bloomberg Invest Global. It's put on by our Bloomberg Live team, and we're talking about all kinds of global investments, asset classes. And earlier today, this morning, in fact, kicking off the event in the United States, I caught up with Grayscale CEO Michael Sonnenschein and Sebastian Bea. He's president of One River Digital at One River Asset Management. Our topic was talking about and asking, should crypto be in your institutional portfolio? And we talked about a lot of things. Here's a little clip of that conversation in which we talked about volatility and the resiliency of cryptocurrencies.
So help me out here, because and maybe this is too simplistic a way of looking at something like the cryptocurrency world, and specifically just look at Bitcoin. In April, it was above 63,000. Late May, it was down to around 33,000. July, it was below 30,000. A year ago, it was 10,000 and change. Today, it's back around 50,000 for the first time in a month. I mean, if we saw another asset class with this kind of volatility, we would say this is high risk. It's not for everyone. Isn't this too the case, Michael, when it comes to things like crypto?
It's certainly the case. It's not for everybody. The same way that every investment opportunity is not something that every investor ends up actioning for their portfolios. I think one of the important things that Sebastian brought up that really should be something that viewers and those listening in should take away from this conversation and throughout the entire Bloomberg Invest event is just how early it is. You are seeing tremendous coverage around cryptocurrency and popular financial media. You're seeing the on-ramps into the ecosystem to continue to get developed, but it really is still early days. Bitcoin's only been around for the last 10 or 12 years. And so one of the important things to remember when we think about institutions is that there are still some legal and operational hiccups when it comes to whether or not they can allocate. Many of them don't have the legal or operational wherewithal to hold a bearer instrument like Bitcoin directly or like Ethereum directly. And so what we're starting to see is some of these institutions either leverage investment vehicles that can give them that type of exposure, whether that's through Grayscale or otherwise, or they're actually developing dedicated funds whose documentation and investment mandate actually does allow for that type of exposure. So while I would say that it's still early days, that is probably the most important takeaway for folks listening to this, that it's not somehow when you see price movements that suddenly the wave has been missed or somehow crypto has gotten away from them.
Well, and Sebastian, on our planning call, you talked about a colleague who said, man, we've seen cryptocurrencies or Bitcoin have, bubbles and bursts, 5-6 times already. So to that, that certainly speaks to the volatility, but does it also speak to the resiliency of the crypto area in terms of it continues to come back?
Absolutely. We think that this asset class is new and important, and it's much more than one or two assets, right? We think that the resiliency you've seen in the case of Bitcoin and with Ethereum relates ultimately to the powerful impact that these assets could have in changing the way that we move assets, right? So the web moves information. And you see people talk about Web 3.0. What are they talking about? What they're talking about here is that cryptocurrency will likely be the way that we move assets around the world. That's why institutions are paying more attention to these assets and these opportunities, and that's why they're not deterred by the high volatility and the uncertain nature of the assets and how they're held. That's why, candidly, we were brought into the space by one of our largest clients last year. When we entered the markets and we made the largest institutional allocation to Bitcoin and Ethereum when Bitcoin was at 15,000 and Ethereum was at 400. Our client and other clients are definitely concerned about the volatility and the way in which these assets trade, but they see the potential. And they need, as Michael said, there are hiccups with regards to legal and operational. There are clearly structural impediments at a high level you could summarize as partners in plumbing, right? This industry is growing its partners in plumbing to enable institutions to onboard. And they're coming because they see that this may well be the way by which assets move in the future, and is much bigger than a couple assets that are a little bit volatile in your portfolio.
I want to get into the regulatory environment, because that's certainly a big piece of this. Let me just ask you, because you talked about Bitcoin, you talked about Ethereum. Those are two that we talk about a lot here at Bloomberg. Is it going to be a smattering of different currencies that stay with us? I mean, we pull up our monitor and the list is rather long, and we know that there's a ton out there. Is it Bitcoin that continues to be the dominant cryptocurrency? Is it Ethereum? There were some stories that I was reading this morning that the flows are moving out of Bitcoin and into Ethereum. Michael, what do you think? Do we know at this point?
I don't think we know at this point. I think that the digital currency ecosystem is continuing to allow for new use cases and new protocols to come into the fold. We've recently looked very substantially at protocols that are part of the DeFi or decentralized finance ecosystem. We've started to see the confluence of digital assets in gaming, digital assets in privacy, digital assets in file storage, digital assets and video streaming, right? We're starting to moving into these new use cases that were not yet imagined when Bitcoin and Ethereum and other major protocols had been created and brought into the fold. Now, while that is certainly the case and the barrier to entry to launching new assets is relatively low, we would suspect that over time, the hundreds, if not thousands of digital currencies will ultimately get consolidated. We often think about, maybe analogizing digital assets to the precious metals family. And we look at things like gold, silver, platinum, palladium, et cetera, all being part of a singular family of precious stones or precious metals. However, each of them have an addressable market, an addressable use case, and a different price. And through that lens, you may find that there's a cohort of digital assets that grow and thrive and coexist, and each of them do, in fact, occupy their own addressable market, have their own use cases and their own prices. Whether or not that's Bitcoin, Ethereum, other assets, it's early days, so it's hard to say what that'll look like. But if there's any telling how this ecosystem evolves, certainly going to see the emergence of more protocols before we see consolidation.
All right, and of course, that was Grayscale Investment CEO Michael Sonnenschein and One River Asset Management President Sebastian Bea. Check out more of that entire conversation. You can go to BloombergLive.com, and you can also check out more of the Bloomberg Invest Global Conference at BloombergLive.com. It is going on for 2 more days and really covering all aspects of the investment space and where we are and some of the innovation going on and where the trends are. And there's also some great content from today's programming. You can find that at Bloomberg.com. We've talked about it too. Bruce Flatt talking real estate and so many more. Lot on the plate, and it's only Tuesday. Go figure. Joe Matthew is coming up. He's host of Sound On. We just heard from David Weston talking to Senator Elizabeth Warren. A lot going on there in the nation's capital.
Yeah, because we needed another issue here. Let's start breaking up the Fed while we're at it, right? But it's the debt ceiling is the pressing issue, and we'll be talking about that in this endless debate over infrastructure and reconciliation with a member of Congress from that area. The president visited today in Michigan. Congresswoman Haley Stevens will be with us, and we are looking at likely a debt ceiling vote tomorrow, and we already know it's going to fail in the Senate. Isn't this getting to be a little bit repetitive?
Heard this movie before. I mean, the problem is the clock is ticking, and we know that we talked with Rick Davis yesterday, who understands how Washington works, and he's like, the longer this goes on, it's not a good thing.
That's right. You remember the op-ed from Josh Gottheimer, Time Kills Deals. That was over a month ago. And boy, we're really watching this. I'd turn around to ask you guys, though, you should come on Sound On to talk to us about the market implications, because investors aren't waiting around for a default. Isn't that the point?
Nope, they're moving on. But it depends on the day, because there's risk on one day and there's risk off the other. So
True enough.
We shall see.
Just the whiff of a default, though, could have major ripple effects, and that's the thing that is, I think, difficult for Washington to frequently understand.
I still remember years ago the downgrade, and that was a big shock to everyone. You're talking about taking it to a whole other level. Good luck with the show. Have a great broadcast. Joe Matthew, host of Sound On. It's coming your way in just a moment. A reminder of how we ended the trading day. S&P 500, a gain of 1%. Dow up 0.9%. The NASDAQ up 1.25%, just finishing off our highs of the session. For the whole Bloomberg Business Week team, I'm Carol Masser, along with Tim Stanovic. This is Bloomberg.